Oh, aloha everyone. Joshua Hayes at bigwavetrading.com. This is going to be a freemium video lesson. Once again, I want to apologize to everybody in the social media YouTube community. I'm slammed. Maui is packed. We have friends and family here right now, and this past weekend, once again, it's busy. So I think everything will get back to normal following the end of next week. I have to go to the Big Island. I will be on the Big Island the entire week next week. But after that, I'm free and I don't have to worry about doing any more tourist activities. So that'll be the wrap on that. So let's go ahead and get straight into the market. What a market it has been. It's been pretty crazy overall. And I tell you what, the volatility just continues to get nuts. Now, as you'll notice, this is Telechart version 7. We're only going to look at version 7 today. Look at the max red bop here. This is some of the ugliest I have seen these indices since 2008. And off the top of my head, I don't even know. Look at it. So even here, we're looking at a 7-day chart. Let's see if I can go 6 days. Look at where we're at on this indicator. We haven't been that low since back in 2000, 2001. So we're talking some ugly, bounce of power indicator action that we haven't seen since 2007 here on a weekly. You'll notice what happened whenever it got that red in 2007, what it led to. The Fed started to do emergency rate cuts. I can't remember if it was here or here, but their 50 basis point rate cut operation, emergency operation, started to begin around that time frame. The dates, CNBC had an article. The dates are there if you're really that curious about it. But the bottom line is, following what happened yesterday, it's really hard for me to be extremely bullish short term on this market, even following this big bounce. Now, granted, this big bounce did come with VIX hitting 50, and I feel like a fool for not selling some puts with the implied volatility on those puts as high as they were on the SPY. And in fact, the intraday trading has been fantastic for these coronavirus stock plays intraday. The past week, the alerts in the trading chat room have been on point. Today was the first there wasn't really any real great setup out there. All the ones that halted, CTRM worked as it halted and held its price and then moved about 25 to 30% off that halt price. But there was no further follow through. So, it's been great intraday, especially for the SPY using the TTM squeeze or the TTM squeeze pro indicator. The moves both up and down have been forecasted very well using the 921 EMAs and VWAP as your guide and the TTM momentum squeeze indicator line. Don't have that available on Telechart version 7, and that's what I'm going to focus on. But intraday, it's been great. End of day, it's been a nightmare. So end of day, there's still problems, and I'll go over that here quickly. I only had 2 end of day long signals yesterday, and this gap crazy market got another one. But still, if we just look at these indices, that was the SPY, this is the DIA, this is the QQQ, and this is the IWM, and you can see how weak it is, still well below its 200-day moving average. Once again, compare the volume on the downside compared to the volume on the upside. One is not like the other, and that's why, once again, until my monthly time frame TSV on a monthly time frame goes bullish and stays bullish with the MACD, there is no reason to get nuts with long positions outside of short-term trades. It's going to be choppy and volatile till it happens again. You can see what happens on a monthly time frame for the indices when it is bullish: 2009 to 2011, 2003 to 2005, even 2016 to the 2018 highs. Since those 2018 highs, we have been bearish the entire time, and I'll maintain that stance overall with new long positions where I tread carefully, tight stops, smaller position size until I get that monthly cross or hot chart. So keep that in mind as we move forward. Nice bounce off the lows, doesn't mean jack squat just yet. So I had 2 long positions from yesterday evening to today's session. One was Chad with the trigger being up and through 2740 with my stop and limit at 2741. Today it gapped down. Nothing to do there. The signal is still true. It's still live and on the books at Trader Workstation and Interactive Brokers for me at 27.41. So far, so good. But once again, this good to cancel buy stop limit methodology. If something doesn't work and reverses like this, instead of buying it at the open and being down a little bit by the close, you just don't get in it. There's been multiple long signals lately that have given signals, actionable signals, based on my historical trading and back testing of what works and what does not work in the stock market, that have triggered signals but have not actually triggered. Chad is one of them. The other long position for heading in today was AIM, of course. You can see it was an add signal, already long AIM, and I did something stupid on this day. Instead of taking profits at my first profit target and then readjusting to 50%, I took all my profits on the gap up and got completely out of AIM. And if you want to remember from the last video lesson, remember how IBIO was a long signal? Got in that day. I believe that was a freemium video lesson also, IBIO, so you all knew I was in it. The next morning it gapped up, and I did the same thing. Instead of locking in 50% of the position with gains and then readjusting my stops higher on the way up as I normally do, I was afraid it was going to reverse based on the overall market, and I locked in my profits. You see how it then closed that session, and then what happened the next day? Wow, that was awesome. Not. So IBIO, tracking on an end-of-day basis for the website, but I'm completely out right here, proving once again how difficult this market is to navigate using my personal end-of-day methodology. I'm overriding things, I'm adjusting things, and it's just a mess. But AIM today, this was the signal yesterday. Reversal hammer candle off strong price support on above average volume with max green bop. The game plan was to get it up and through 198. And sure enough, the stock gaps up. Pulled back to 205, but 205 is not 198. So I didn't get AIM intraday. Got all the way up to 286. That would have been a nice 45% gain had it happened the way that I wanted it to happen. That being said, AIM, swing and a miss because of the gap up. Chad, no harm, no foul due to the gap down. But I did have two stocks trigger intraday today. One was ATOM. ATOM, I'm long already here. Got an add signal here. Somehow did not get filled on the add signal. Pulled back in. Signal remained true. That add signal triggered and filled today. So now what I'm doing with ATOM, now that I'm long in full position, first stop, second stop, final stop, 33.3%, 33.3%, 33.3% on ATOM. The next stock to fill was JAN. JAN's initial long signal, I believe, was here. Nope. It was, but then it gave two separate signals. This one here, nope, this was not a signal because it's down on the day. Okay, so this is the initial long signal at 377. This is the add signal here at 380 because I got filled today at 377 and 380. So this was the initial long signal. This was the add signal. They both filled today. Now with Jan, what I'm doing, the first profit target, I really don't have any area that's a logical, rational profit target until 640. So I'm going here at 450, around 450, so I can at least lock in profits on half of it if it does move up before it fails. I should adjust it down to 445, which is this resistance level at this price bar here. That way I can at least lock in gains. It has lost the green bop, so that is always concerning. I'm going to go ahead and tier 4 stops on this. Two really close to each other. 359, 355, bam, bam. If it closes below these two levels, I'll be out of 50%. The next stop is right here at 341. And the final stop, oh, actually, I'm wrong. I got another one. 335 I'll be using. So 335, and then a final stop at 328. So I'm going to have 1, 2, 3, 4, 5 stops at Jan. You might think that's insane, but remember, the minimum size of these trades that I'm putting in for Jan, the amount of capital that I put into Jan is $5,000. So if each of those 5 stops trigger, it'll take me out of $1,000 out of each of those stops. And I only pay $1 in commissions. Now, it's going to be a little bit more for Jan because of the price of the stock, I think. But still, at Interactive Brokers, it averages out to about $1 per trade using the IBKR Pro version. So, Jan, triggered filled. So far, so good. But that's my game plan moving forward. ATOM triggered filled. You know my game plan moving forward. The one thing I forgot to mention is I do have a 50% profit target at 637 on this position. I do not have it at 572 or 538, but you could put one there if you just want to take profits with any kind of gains in any stock in this market. Because as long as the VIX is over 20 or 15, see this white line, this blue line here, I think that's like the 15 level. It's pretty darn close. As long as it's over 15, things are going to be volatile and wild. So with all that being said, unfortunately, guys, in this market environment, I really would like no signals to trigger, but a signal is a signal is a signal. And if it does trigger a signal, then my hope is it doesn't trigger on the long side if the market's going to move lower. But I can't predict the future. I don't know what the market's going to do. So we now need to go over the new long signals for either the rest of this week or tomorrow. First one I want to go over is STNE. STNE is Cancelim quality, perfect speculator scan quality, and was in my price volume BOP surge scan. I have now readjusted back on the quality side of increasing my capital per trade based on how many scans the stock shows up. STNE showed up in 3 scans, so 3% of my end of day account capital goes into STNE. It's number 4 in its industry group, 97 composite, 84 relative strength, 84 earnings per share, 95 composite, AAB letter grades at IBD, and it has 8.6% of its float short. So definitely a go for me since earnings are also out of the way. Technically, it's an earnings winner. So hammer candle over hammer candle, right above the uptrending 50-day moving average on above average volume, and you can see green BOP growing. We've had multiple pocket pivot point signals, so for me, we're good to go. The game plan is up and through 44.88, triggering my limit and stop, perfect price only at 44.89. If it gaps up above 44.89, I do not call back on or want this trade to fill until the bid, ask, and price is back below 44.88. Then and only then will I call back on my order at 44.89. If it triggers, my first stop is 42.14, 39.84, final stop 38.74. The next new long position, MINE. Very nice chart. Like it a lot, but MINE is not just MINE. WSC and MINE are merging into one company. This is the announcement of the merger, this date right here. So technically, all the previous price action, MINE, is irrelevant. So we're just using this period here. But I'm still taking the entire chart into context. I'm speaking of stop-wise. So MINE is a new long position, Cancelim quality, confirmed in my price volume BOP surge scan. So 2% of my account capital is going to MINE. It's number 1 in its industry group, 91 composite, 89 EPS, 89 relative strength, and it does have 2% of its float short. So MINE is triggering a bullish hammer candle over candle signal above its uptrending 50-day moving average on above average volume with max green BOP. The game plan, up and through 41.66, triggering the long at 41.67. It gaps up above 41.67. I do not call back on this order or want it on a pullback until it is back below 41.66, where I will then call back on the stop and limit at 41.67. If it triggers and fills, we have 3 stops to work with. 40, 39.79, 39.37. That's some tight risk management along with STNE. So those are the top 2 ones from my Cancelim and Perfect Speculator scans. But then 2 other stocks triggered. As I went along into my secondary scans, there was TBF. Why not take a trade with this signal? What I have here, TBF first off is in my daily volume surge scan, my ETF scan, and my price volume BOP surge scan. So 3% of my account capital is going into TBF. And that's fine with this much because we got some pretty tight risk parameters. So once again, I have a bullish candle over candle on heavier above average volume, big surge in BOP to a high green level. I want it to trigger up and through 1718, triggering my stop and limit at 1719. A gap up above 1719. I do not want this order to fill on a pullback until it is back below 1718, where I will call back on that stop and limit order at 1719. If it triggers and fills, your first cut loss level on TBF is 1684. Your final cut loss level is 1658. The last long position I want to go over, and I need to add one more thought to all of these long positions that I forgot to mention. CPSI. CPSI was an original long signal right here. It filled on this session. It gave an add signal here, but never triggered because it never traded up and through the high of the day. That being said, that add signal is still valid because the pullback, while it has come on slightly heavier volume, the volume never eclipsed the signal day, and it has maintained its max green BOP the entire pullback. Now CPSI is triggering from my max green BOP for the past 5 days scan. It's a scan I run for this indicator. Bullish candle over candle price bar pattern right above the 200-day moving average on heavier above average volume with that max green BOP. CPSI up and through 2715, triggering my stop and limit at 2716. Perfect price or no price. 2610 will be my first cut loss level. 2535 will be my final cut loss level. And CPSI has 4.3% of its float short, so it is a potential short squeeze candidate. But the best one overall this evening, if you got to pick just one, doesn't mean it's going to work. This will be the one that probably fails the most spectacularly. How about that, okay? That's the way the stock market works, especially right now. Many will probably run, TBF and CPSI will run, even though I say that this is the best setup because that's my personal luck my entire life, ever since I was a baby, and it's just the way it goes. I make money via skill and disciplined trading, never by luck. Never been lucky. If I can ever get lucky on top of my skill, I'm going to be filthy freaking rich. But right now, you know, I'm doing all right. So STNE is the top one, especially with 8.6% of its float short. Now, what I did not mention before I wrap up this video lesson is if STNE opens lower and then fills, even if it pulls back and then comes back up and fills, whatever tomorrow, let's say this all happens tomorrow. I'm going to review all these. Whatever tomorrow's low day is, that now is the first stop. So it'll be whatever tomorrow's low day is the first stop, second stop, third stop, fourth stop. If that happens with mini tomorrow, well, let's say that it's at 41.40. This is the low. 41.39 will be the first cut loss level. Second, third, then fourth. TBF, the same thing. If, let's say, 17 is the low tomorrow, 16.99 is the first stop, then 16.84, then 16.58. Same thing with CPSI. CPSI triggers and fills tomorrow. Let's say tomorrow's low a day is 27. Then 26.99 is the first stop, then 26.10, then 25.35. Especially since I'm now increasing size per these quality long signals. Immediately after they trigger, whatever the low a day is of the trigger date, that's your first stop level now moving forward. All right, everyone, going to wrap the video lesson up here. It's another long one. My apologies. It's impossible to make these things short. I try, but I can't. If you're watching this video lesson, please show me some love. Feed that YouTube algorithm. Give me a thumbs up, a like, subscribe, ring the bell, and more importantly, if you can at least leave a comment and say, love the video. Hey, heck, say you hate the video. Say you hate my analysis. But the comments really help move this up the YouTube algorithm, search engine results. And the more people that watch this video lessons, the more I want to make and give out public videos. But if we continue to have around only 100, 200 people watching them, then I'm just going to continue with the status quo and just do one on Wednesday. And then I'll do 2 video lessons on the weekend. The first one for premium members, the second one for the social media and YouTube community. All right, everyone. Aloha. Have a wonderful rest of your evening, and I'll see you in the chat room Thursday morning.